Next up, after you've decided whether or not you're going to qualify for the stimulus check, the next thing you want to know is how much you're going to get. Congratulations, my acolytes of success, because you are watching the Success Channel. My name is Paul Vasquez, JD. That's how you'll find me on the YouTube. I am the president of Tax Lab Pro Business Solutions, inventor of the Hat Tech, and co-founder in the Singularity Network. Those things are not what I want to talk to you guys about today. If you qualify, you're scheduled to get $1,200 for single people and $24 for married filing jointly, plus an additional $500 per qualifying child. And you'll have to go back to watch the previous part of this video, or if I divide it up, the video that ends up going over that. This is how that amount can be reduced. And it says right here on page 140, so the first page of this code section of Subtitle B. So we go down page 140, Subtitle B, and line 20. And line 20 says limitation based on adjusted gross income. Some people might be trying to play the game where they're deciding whether or not to file 2019 before getting the stimulus. And there's some ambiguity on here. I'm going to tell you where that ambiguity, or where, it's a little bit shaky as to how this is going to actually play out. So it says it shall be reduced, but not below zero. And I'll get into why that's important, by 5% of so much of the taxpayer's adjusted gross income as exceeds, right? It's not, and it says so much. So by how much it exceeds. So if it exceeds this, it'll be reduced by 5%. But is that saying, what's the regime? Will it be reduced down to zero? Is it a just flat 5% once you're over these amounts? Just want to give you guys a quick update on the possibility that the funds might be cut off once you earn $99,000 or the equivalent. I did not read anything in the bill that said that. You guys have access to it. You're free to look over it. However, in listening to the president, he's been giving updates every day, almost, if not every other day, but almost every day. And he keeps saying that there is a $99,000 income cutoff for the stimulus for individuals. Just like we saw with the Affordable Health Care Act, and the penalty regarding that is that this president had decided that regardless of the rules, that he would not enforce it. I don't know if this is a similar instance where regardless of what the actual documents say, he's making it an executive order of his own, or as an executor executing a limit on that. Once again, I think this may have to do with our friends at Congress who probably make over that amount. Maybe originally he wanted that in the bill, they didn't put it in. I don't know exactly know. But regardless, there is still a chance that even if that bill does not say that $99 limit, he may still try to comply with that because he's been adamant about it over the pulpit, so to speak, or the microphone. So just wanted to give you guys that update, but let's continue. And going on to page 141, line 1, it says $150,000 in the case of joint returns. So if you filed MFJ, married filing jointly, and you made over 150, it said 5% of so much of the taxpayer's adjusted gross income as exceeds. So you can get up to that 150 married filing jointly. But if you're over that, it's going to be reduced by at least 5%. And I don't know if it steps down from there. It's not clear on that. Maybe it doesn't say that it does, so maybe it doesn't. But we'll see. $112,500 in the case of head of household. So you can get up to that as head of household, and then after that, it's at least 5%. It does not say there's a cutoff. I'll get into where I suspect the cutoff might be if they determine there is one and how that might scale. But this does not say there is a cutoff. It just doesn't. It says it will be reduced by 5%. And at $75,000 of income reported on your 2018 or 2019 return, in the case of a taxpayer not listed of the two. So if you're not married, filing jointly, if you're not head of a household, if you're single, or right in the case of marrying, filing separately, that would be a $75,000. Then you might get stepped down by 5%, not to exceed 0. And we're going to talk about that a little bit more, because if we go down to this same page, 140, line 16, coordination with advanced refunds of credit. So it says, in general, the amount of the credit which would, but not for this paragraph, be allowable under this section shall be reduced, but not below 0, by the aggregate refunds and credits made or allowed to the taxpayer under Section F. And it talks about the failure to do so and things like that. We'll get into that later on down the road. But let's go ahead on to advanced refunds and credits, line 6 of page 142. Page 142, line 6, advanced refunds and credits. It says, in general, subject to paragraph 5, each individual, that means if you qualify, right? Each individual who was an eligible individual for such individual's first taxable year beginning in 2019 shall be treated as having made a payment against. So if your first tax year was 2019, that stimulus money is going to be treated as having made a payment against tax imposed. So if you have taxes imposed under Chapter 1, basically taxes, for such taxable year in the amount equal to the advanced refund amount for such taxable year. So that's going to go to offset your taxes if your first taxable year beginning in 2019. So if that was your first taxable year, I'm going to get into a little bit more what I think about this, but let me go through it first. So basically, if 2019 is your first tax return, it's going to go to offset your taxes as though it was a credit. And some people are getting this wrong. So right here in the second one, we're getting into a little bit the taxation issue. For purpose of paragraph 1, the advanced refund amount is the amount that would have been allowed as a credit under this section for such taxable year. You are not taxed on credits. This has been a bit of a misnomer. Yes, it's not counting as income. It's not going to be taxed because had this all been passed prior to them producing the 2019 tax returns, and they had a chance to kind of formalize all this prior to the tax year starting or us filing for taxes, then we would have seen an additional credit on your tax return, just like a child tax credit, any of the credits. And credits come after taxes are there. So it doesn't go to offset your income. It's not counted as a part of income. It is a credit that goes against the taxes for that tax year. Now, later on, it does seem to, and let me see if I can find it real quick. Here it is. I found it. Okay. On page 143, and I want you to look at the top here. This is where I'm a bit concerned about playing the game of not filing that 2019 tax return. While if you don't have a 2019 tax return, they're going to assess it based on that amount. They're going to be, let's go from here, right? It says a failure. So the amount of the credit which would be allowable under the section shall reduce by the aggregate refunds and credits. All right, so it's going to be reduced, allowed under the taxable section of F. So they're going to be looking at that, at what would have been 2019 if that was your first year. Any error has to be figured out. Credit shall be treated as arising out of a mathematical error or clerical error as assessed according to the section B1 made or allowed under this section after December 31st, 2020. So is that saying that they have a chance to correct that error? because they have a chance to correct the errors. I believe that's what we're getting into here, that they have a chance to correct their own errors, which is why you might have to pay some of this back as if you end up owing in 2019. I don't know if not filing the 2019 will allow you to keep that money.